All right, legends, the price of Bitcoin got a major drop throughout the last few hours. And if you were paying attention throughout the last video, watch before Monday, we had two major levels to pay attention. The 91,700 and also a higher low that we had right over here at 89,500, which is a reactionary trade. If there's no reaction and you break through, we want to be very, very cautious as we do have this fair value gap. And if you lose this level, you're likely going to lose it. So whoever paid attention, we talked about the value area high here of this consolidation of the last few days to basically get that resistance and look for a possible short position. This was the level that I was interested in here at the 91,700 to get that rejection, possible shorting zone, and look for the movement to the downside. Today we got some new information. I will be talking about what needs to happen, okay, for me to be confident on my next trading setup. First, a quick reminder, nothing in this video is financial advice or should be taken as investment advice. It's just my opinion. I'm just sharing here my technical analysis, and it should be treated as educational content. Let's go right away through the different scenarios here on Bitcoin. We're going to cover here the higher time frame, and what I'm giving priority is eventually the bearish case, just because on the higher time frame we are downtrending, as you can see, from all-time high with lower highs and lower lows, as you can see on the chart. So we need to give priority to the bears and look for internal opportunities on the 15-minute time frame. This is what I am prioritizing for the moment on the higher time frame, that we possibly could be creating one more low beneath 80,500 and just basically continue the downtrend for the next coming weeks. So I am interested in possible rejections at this area, right? The 382 Fibonacci taken from your wave 3 to the pivot low of your wave 3, 382 to 50% Fibonacci on the higher time frame scenario according to this Elliott wave count is the zone of rejection. So looking for swing shorts in this area safely with levels, right? Just as mentioned on the video on Friday, basically, where we do have, you know, this major level of resistance that could form a lower high at 91,700. We exactly went there on Sunday, and that is the zone where it struggled and now is collapsing throughout the last few hours. Okay, so I mean, obviously that gives you the entry trigger, right? It gives you the possible entry trigger. We can talk about, nobody knows at the end of the day what's going to happen, but on the higher time frame, if your bias is bearish, you want to look for good entry triggers on the lower time frame, and that's what we try to do. We'll be covering now the lower time frame, guys, to explain a little bit what I want to see. But this is what I am prioritizing, right? A wave 4 and take out the low at 80,500 potentially in the next coming days, give or take 1 to 2 weeks, right? We just don't know exactly when it's going to happen, but the overall trend is to the downside. And where I'm not giving priority is for the bullish case, where this is a 3-wave corrective structure. The moment that I would prioritize this is if we do hit $97,000, which would invalidate that possibility of the wave 4, right? I think everybody can understand this right now, and we could still, you know, we'll be looking at bullish options from there. Let's break down the 15-minute time frame, because for me, it's relatively simple. What I'm waiting for throughout the video on Saturday, it wasn't Friday, Saturday, okay, it was either reject from here, the interesting zone for shorts, and the interesting zone for longs was this pivot higher low, all right, which is basically looking for a swing failure pattern. The danger of expecting that it's going to bounce, all right, you know, it is there. If you just get into longs randomly here, limit longs, eventually we are reactionary traders. We have a level and we pay attention on how we react. If you lose the level and you're trading beneath the level, you're no longer interested. Okay, this has to be crystal clear. If you cannot get this information in your brain, then eventually you will end up failing as a trader. Now let's go right away through the bearish and bullish case scenario. For me, it's relatively simple. We have invalidated many different scenarios just to take into consideration the other day. The multiple 1-2, we need to, you know, basically maintain above $86,000. So multiple 1-2s here is not looking great. We also have this continuation of 4-5s. It was very much a possibility, but we trade based on levels and then we maintain in that trade, okay, based on, you know, the levels, you know, realizing that, you know, maybe the movement here has finished, right? We talked about the possibility of the movement here to the upside to be finished in an ABC, right? There is a valid count for a 3-wave structure finished here. And if you have a valid count, you need to have levels to consider where you would want to potentially short for a lower high, because this could be the high, right? At least in this uptrend of the last 10 days. So if you have that valid count, you always need to consider the levels where you would want to enter a possible short based on the confluence and the resistance, right? Also considering Elliott wave theory. So that's your trigger short. Then whatever happens next, it doesn't really matter, because on higher time frame, you are looking for potentially the continuation to the downside in a 1, 2, 3, 4, 5. You still have a few more 4-5s to develop. And on the lower time frame, you understand that there is a chance for this 3-wave structure to be finished. And where are the levels of confluence that you're interested in participating on that general bias that you have from the higher time frame, in this case, the 91,700 to 800 range. So this is a possibility. We've eliminated a few scenarios, multiple 1-2s and 4-5s. That's invalidated. This one, multiple 1-2s as well, where we had a bigger third wave possibly developing in the next week. That's invalidated as well. This WXY, where we're looking for a possible another zigzag move to the upside, a B wave getting developed and another C wave. This has been invalidated also, right? You've literally got beneath these higher lows. And if you are looking for an ABC here in a WXY, you're literally looking for that zigzag move. We're looking for a double zigzag up and your correction wave X and another zigzag to the upside. There's no zigzag happening right now. You got beneath the start of your A wave of the double zigzag. So this has been invalidated as well. And there is another larger corrective structure that I want to talk about, but it will be talked about on the live stream, guys. Make sure to subscribe. We're doing a live stream later on, and we'll be detecting some intraday scenarios that I'm looking for. But for the moment, we are prioritizing the bearish case till proven otherwise. Now, what are the different scenarios? Well, we have this one right over here, finished ABC movement, and now possible impulsive move to the downside. It doesn't really matter. Your wave 1 here would be better to finish as a 4-5, because there's a little bit of a problem right now, and it's based on timing. When you have such an aggressive move down very fast and it's such a large consolidation like this, it's very, very rare for this to be a wave 2. However, there is one more low that happened throughout Saturday. So you can label this as a 1, 2, 3, 4, and 5. That looks better as a 5 waver here. All right, down to have your wave 1, then this is wave 2. Okay, so there's both valid counts, but this one doesn't look too great because your wave 2 is extremely long. So as you did create a new low here for a 4 and a 5, it looks better based on timing. Okay, so this is what I'm possibly prioritizing at the moment till proven otherwise. Proven otherwise means hitting $89,500. That would be the invalidation for your wave 4. Now you are looking here internally on the 15-minute time frame between today and tomorrow to basically reject at some point in between the 236 and the 50% Fibonacci. I'm not too interested if we do get some clear information. There's not much resistance in this zone, I have to say. I'm not really that interested in any intraday scenarios at this point. I want more information, so I want to see that consolidation not managing to get to the golden pocket and create one more low. That's when I can have a 5-wave move to the downside, and then the bounce is going to be what I would be interested to either compound into a short that I already have or get into new short positions. But we need a little bit of more information. We could go in detail on the live stream on the 5-minute, 15-minute time frame, but this is what I would be prioritizing for the moment. However, I need one more low. I need this bounce to not reach the 89,500, and then I can consider that we are looking for a bigger wave 3 later on, 4 and 5 to complete that 5th wave. Okay, we're literally looking at this scenario right over here to create one more higher time frame, wave 5. So now it's time to detect, do we form the first wave 1, right? Is this going to be the first wave 1? We form a wave 2 throughout the next coming days, collapse down in a wave 3, 4, 5, right? To complete that 5th wave on the higher time frame. That's where I'm going to be interested to get into new shorts or compound into my existing short position. Now, the bullish case scenario, which I'm very much aware, it's possible, it doesn't look great, is forming a 5-wave move to the upside here. Devil was pointing this out in the pro community. I don't like it too much. It's very messy. Throughout the previous months, we were detecting these bounces as mainly corrective. Especially this one right over here was pretty spot on that this was actually going to be corrective, and also this one here. But you always want to consider a bullish case, even though it looks awful. I have to say this bullish case scenario does not look that great. Now, the moment that this would be clear that this is a 3-wave corrective structure to the downside is coming to that golden pocket. If that is going to be the case, we have to consider either a larger sideways corrective structure or that this has been an impulse. If the price does not create one more low after this current bounce that is happening locally here, and we manage to really rally successfully to hit $89,500, we can consider that this could be an impulsive move, as this movement down is corrective, and either this is the low right over here, or you form a larger sideways corrective structure or a double zigzag, and then we move to higher levels. But that's the moment that we are going to give attention to this movement up being impulsive as soon as you hit 89,500 without creating a new low. This is important. If you create another low, you have an impulse here. You have a very valid impulsive move, and I would be interested in looking for shorts on the bounce. If you do not take out this recent low and you hit the golden pocket, we are looking for this to be a 3-wave corrective structure. And there's a few options eventually. The low is in, and we end up rallying here to take out the highs. We have another option that you have a larger sideways corrective structure where you have a zigzag down, maybe it's a zigzag up, and then you have a flat or you have a triangle, right? You have several options that could develop, and then you rally to take out the highs at $93,000. It doesn't matter. I get people in comments saying you basically don't know what's going to happen. I'm telling you, I know exactly where to execute trades, and then I will either, maintain that trade, compound into that trade, take some profits on the trade. We know exactly the levels and the scenarios that we want to take into consideration. We have higher time frame bias, which is moving to the downside and claiming the low, realizing that we could top out in between the 382 and 50% Fibonacci. I want to take a look at the lower time frames to consider where I want to execute the trade. And then it's just, managing your trade, taking profits, adding to position on sign of weakness. You know the deal, right? It's not about knowing exactly what's going to happen next. It's knowing if we do hit the golden pocket, I realize that this is a 3-wave structure. This could either continue going sideways, it could either be the low, and this has been impulsive, very, very ugly one, but you have to consider it if you get that bounce to 89,500. So what we would be looking at here is this movement up an impulse and this movement down corrective, and we just get into new long opportunities based on the information that we get. Okay, so for the moment, this is the scenario. If we do hit 89,500, I will be considering, possibly how did we get up there? Is it an impulse? We form a corrective structure. Correction to down to the 50% golden pocket zone is going to be, my start zone of interest to see how we move down there, to look for longs. Maybe this is a wave 1, wave 2. I don't know. Nobody knows, right? You need to adapt to the levels, the confluence, and the conditions that the market gives you. For the moment, I would say, if we do bounce, we don't hit the golden pocket and create another low, that's it. We got a good option here that this has been a bearish, impulsive move to the downside. Pay attention to the bounce, hitting the 50% to the 7-8 Fibonacci. That's where it's going to be looking interesting to, consider taking a new short position. If you have a lot of confluence, right, based on levels, you might have a naked point of control, a session VWAP coming into the level, and then, you just consider taking that possible short because we have an option of 1, 2, 3, 4, 5. We're getting below $80,500, right? We adapt, we create trading plans, and that's what we do. Whoever entered a short position based on the value area high of this region that we did talk about on Saturday on the video, guys. This is the rejection point. We did talk about the long in zone as well that I was interested in, but it was invalidated and we did not react. This is what you need to understand as a trader. This level is awesome. It's a great level, fair value gap. A lot of the times they get a reaction and they get a reactionary bounce. If it does not react and you lose it, you're not interested in being in the trade. No adding to position. Anybody that's doing any of that irresponsible trading is right now underwater. You do not react at the level. You got a fair value gap. You do not enter the trade. And if you entered, you need to get out quick. Okay, this is explained, guys. I want to make you a very, very good trader. Make sure to subscribe to the channel. We'll be doing a live stream later on, okay? Make sure to check out the links down below, okay? You got some great perks. These are exchanges that I use down below where you got some great perks, okay? As you can see, Velto is a decentralized platform that I have been testing out. I will be testing this out also on the live streams, guys. If you are interested, check it out, okay? Bluffing down below, you do have also my decentralized platform, all right? Where you just basically connect a wallet, no middleman, and it's a great platform. If anybody wants to test it out, you have the link down below in the description, guys. Make sure to subscribe. We'll be doing a live stream later on. I'll see you later.